Is the US dollar at risk? The Federal Reserve meeting next week. We have AI layoffs and BRICS gold, literally, right? Welcome to another episode of Military Wealth Club. This week we're covering the dollar, the Federal Reserve meeting that's coming up next week on the 18th, right? We got tons of AI layoffs plus tech layoffs, right? And BRICS, which a lot of people are just figuring out what bricks is, right? We're not talking about Legos here. We're not talking about actual bricks here. We're talking about who is coming to compete, right, with America on the monetary level. So let's go ahead and get right into it. We're going to start with number one, right? The Federal Reserve meeting that's coming up on the 18th. I really want to touch on this. So since pretty much last year, right, we got a lot of cuts at the end of the year. And then we were projecting for 4 rate cuts in 2025. Then they adjusted it down to 2, and the market's speculating maybe 1, if any, right? We've had CPI and inflation kind of ramp back up over the last month, but then we're seeing new reports of it coming down, different parts of it, right? You have housing going up while other things may be going down, like energy went down just a little bit, even though Trump's about to announce pretty much an energy crisis, which is going to push us into nuclear, right? I know if y'all have been watching the show, y'all know I love talking about nuclear. I love talking about that new phase, but I really see that happening. So that's another topic we got coming up this episode, but we'll stay on the Federal Reserve meeting on the 18th. So let's actually take a look. I'm going to take a look here at the data. And we are pricing in for the meeting that's happening next week. We're pricing in a 98% likelihood that there's going to be no rate change, right? As of right now, so a 2% likelihood of a rate cut of 25 basis points, right? So just to remind you, 25 basis points, to put this into comparison, at the end of last year, we cut 50 basis points and then 25 and then 25, right? Now the basis points, they use that system. Don't think of it as a percentage. A lot of people think, well, 25 basis points is a quarter of a point. It's not really exactly like that, but it's the gist of things. Okay. So right now, 98% likelihood that there's going to be no rate change at next month's meeting. Personally, I don't think the Fed is really going to do any changing of rates unless the data shows it, or unless they know that something is coming and they're trying to really prepare the economy. They could know something that's going on in the administration, right? They've been doing this for a long time. They could probably read between the lines, and they may move something. They may try to do something before the government does. I'm not going to go too deep into details on it, because the Federal Reserve, they're their own entity. They're not supposed to be, right, influenced by anyone else, by not Trump, right? What he's saying out there, by anyone. So they come together, they make their decisions. Jerome Powell, he's really been on the data, talking about the data, the data, the data. Their data between what they get and we get is very different. So be careful of the data that you're trusting, because bad data in is going to be bad data out. All right. So Federal Reserve meeting next week. There's most likely not going to be a rate change at all, but what they say and how they say things affects the stock market. You would be really surprised that you can see videos of how they're gonna start the presentation, right? The speech, the aftermath, after they have their meeting and they come in and address the public. You see the market just watching Jerome Powell talk. Like they even study if he takes a sip of water first, if he says this first. He said you'll see the markets micro reacting to every single thing. It's super interesting. But all that to say is, obviously, the Federal Reserve and what they do has a lot of power in all the markets, because that's where the loans are coming from. That's where people are borrowing overnight money from these banks, from all of the banks that come from the Federal Reserve. So there's different banks in different regions, and then all these local banks borrow from those banks, right? So that's how lending works. So just so you know, a Federal Reserve meeting next week. Why is it important? Why do we care about the Federal Reserve, right? Well, I'm going to lock you up in the Federal Reserve. If you don't know that quote, you need to watch The Other Guys. It's a great movie. But anyways, we care about the Federal Reserve because they set the Fed funds rate, and the Fed funds rate is basically what they loan out to other banks. That's the overnight rate. And the difference, right? That's why a mortgage rate, let's say the mortgage rate for a VA loan right now, 30-year VA loan is about 6.24, right? Now, if we're saying, hey, the Fed funds rate is between 4.25, 425 basis points and 450 basis points, right? For let's just say 425, between 425 and 4.5, right? So there's a spread there, right? There's almost a 2% spread. Well, that spread is where the banks make their money because banks make their money off of usury, literally off of loaning money to us, right, at an interest rate, and they get it at a lower interest rate from the banks, right? So they would go to the Federal Reserve, get it for 4.25, 4.5, and then loan it to us at 6.5, right? So that's where they make their spread right there. And then when you get a loan out, let's say a mortgage, there's interest on that, right? And that's exactly where that mortgage is derived from. And they're making money off of interest. So little secret, interest, loaning money out is a very, very good business, and that's why banks do it. That's why banks do it, because you're literally just loaning out money, taking the risk on someone else to produce. And if they don't produce and pay the loan, then you have all these government functions to you have all these government functions to pretty much remediate, right? So all right, that's the first topic, Federal Reserve. We're gonna keep on going here. Let's see. Next, man, it's been a crazy week. I tell you that. I don't know if you have felt it's been a crazy week, but this week has been something else on the good side, right? Don't listen to all this news and get caught up and let it stress you out and bring your cortisol up, right? And just get you super stressed all the time. That's what they do, right? They're pretty much here to rile you up and get you to read, get you to watch as much as possible, get you to talk about whatever the topic is. Look, do not get the news, or excuse me, do not let the news rile you up. It's not beneficial for you, for your blood pressure, for anything like that, for your friends and family. So please do not get riled up by the news. The world is not ending. It's not going to end tomorrow. We're not in end times. Please, we're still going, and we're still here to make money and to create wealth and on the pursuit of happiness, right? We have to combine all of those, the 3 Ps: purpose, passion, and proficiency, and we can really pursue happiness throughout our lives. Do not get caught up in the drama, in the clout, in the news. It's a distraction, all right? It's a distraction. Okay, man. So yeah, crazy week. It's been a week. So we have unemployment rising, right? Rises to 4.1. And then in consideration also, you have to consider the job market too, right? So there's the unemployment figures, and then there's new jobs being added every month, right? I think they're claiming 151,000 jobs added recently, but we've got a ton of firings, right? So we have to take all of these things into consideration. So the U.S. employment rate in February, right, increased to 4.1, right, 4.1, and a lot of people are concerned because of the slowing labor market, right? So like I said, you have to take unemployment. You also have to include jobs that are being added, and then there's multiple unemployment numbers as well, like people who are initially claiming unemployment, and then people who have been claimed unemployment. They're going 6+ months, right? And they're still filing, right? So they record all of that, and then there's obviously jobs that are being added and how many people are employed, and then they divide that as well into like non-farm payroll. So right, people who aren't working those types of jobs, and then farm payroll, right? So it gets deep, but that's why we're here to break it all down. So, right, February 2025, we have unemployment hitting about 4.1, and it's really sparking concerns about the slowing labor market. All right, so hiring is super slow, especially in tech, especially in real estate. You've got tons of realtors just leave in the industry, right? Because they can't make ends meet. And lenders, right? Which I'm not here to speak on why they leave, anything like that. I'm not here to speak on any. I'm not here to step on anyone's toes. You got to do what you got to do. We get it. All right. So we still have layoffs rising in these key sectors, right? So, and we have analysts that are warning that further economic cooling could lead to a mild recession. Recession. Been calling recession for the last year. I've actually been calling recession since summer of 2023, right? It's in our wallets. You feel it, the people around you. Now, some folks may not be in that boat at all. They may be at a status level, a financial level where none of their friends feel any type of change in their lifestyle, anything like that. But back in 2023, I was seeing this coming where a lot of people were penny pinching and were coming back from all the unemployments from COVID, right? Things just don't go straight back to normal, and they still haven't. Look at all of this data. There's still statistics out there of, oh, we've returned to pre-pandemic levels, right? That was years ago, right? And we're still recovering. We're still recovering from this. So it's really a big deal. And I'll tell you, I was speaking to someone that is really into stats and data, especially in the real estate world. And the number one thing that they said, because I proposed the question of what would need to happen for an economic recession, not a collapse. I'm not saying the world is going to be over. A crash can be considered 20% or more. Sure. Let's say a really good correction, recession, whatever, however you want to call that, whatever degree, right? I like to think of it as a recession. What he described was unemployment rising for a sustained period of time, right? Maybe 8%. He mentioned for maybe 2 or 3 years, right? So 24, 36 months of about 8% unemployment, right? Now think about it. Think about it. That's not too far fetched. COVID, we were at 14%, right? We weren't there for 2 years or 3 years. You know, it was a blip in time, of course, still extremely painful for people. But if we see our unemployment keep going up because we have AI layoffs, right? I've been preaching to people about AI, right? It's here to create productivity. I'm not going to say it's here to take your jobs because it will replace some people's jobs, but it's really more of a tool. So it can really increase your productivity, increase your creativity. If you don't choose to use it, that's fine. And also I understand there's a lot of positions out there that they don't give you the opportunity to use AI in your work, in your profession, right? But they may still replace you. So there's nothing you can really do, right? They may just outsource that, put that task, that function on the server, run it through some type of AI, make it repetitive, whatever it is, right? This is pretty much like the 90s with the tech boom, right? We have the introduction of this technology that can increase a ton of productivity, right? So we're going to lose jobs at first, initially, and then as time progresses, more jobs are created related to that field. Usually, right? Usually, I don't want to say in every case because with AI is different than the internet and the tech that we got, right? We're getting a major tech upgrade as we've seen in the last few years with the number one company, Nvidia, carrying pretty much the stock market, right? And what do? They provide microchips and these servers and all of this processing power for AI. So this all connects together, right? It all connects together. So as unemployment keeps rising just through time, right? 10,000 more here from this company, 20,000 from this company. We just saw the VA announce like 80,000 layoffs, something like that. So this number can go up over time, right? Who knows? By the end of this year, we could go from 4% to 6%. By the end of this year, who knows? I don't know. And then the next year, we could dig in deeper. I don't know, right? Now, I do see we could gain a lot of jobs from, I'm going to say two things. Actually, I'll say three things that I think are really going to bring jobs back to America. And I'm not going to say that it's Trump pushing the move or it was Biden. or this or that. Look, we're not here to get political about anything at all. But these are the three sectors that I really see driving America's economy in the next 5 to 10 years. So, number one, I see nuclear power making a comeback. I've been making this call for a while. My background is as an electrician in the Navy. I was an electrician on fighter jets, and then I flew drones for special forces, and I worked on them. So I understand electricity and the demand. And over time, we've seen just more electrical items. You have more Internet of Things, just more things that require electrical draw. Everything now is rechargeable, right? And if it's not rechargeable, it still has to get plugged in. So I've just seen the demand of electricity increase like wildfire. Now, I do know that we haven't revamped the entire electrical grid in so long, right? We set a really good grid. Electricity, I'm not going to say it's always super efficient, but some systems you can make them and you can leave the bones for 20, 30 years, 40, 50, right? A lot of old stuff. Some of these houses that I see, they have old electrical panels that are not good to go at all. So you can leave a lot of good bones and leave the structure, but eventually you're going to hit a point where you have to do a big revamp, or at least a major revamp in a way. Whether that's at the grid level or it's at the residential level, who knows? But what I see is nuclear making its way back in, which it has already been. You have Microsoft, I believe Microsoft buying 3 Mile Island, which was like I believe, an old radioactive island that they were using for nuclear stuff before, and now they're going to fire it back up, right, to power pretty much all of their operations. So this power draw it's a lot, right? Think about it. When you're using ChatGPT or something like that, right? Think of that productivity, that time, that energy that it just took off your plate, because now it's doing an hour function, right? Or something like that for you. 2 hours, 3 hours, something that would take you 8 hours, it's cranking out in maybe 10 minutes, if that, right? So that energy, though, that compute power has to come from somewhere. And where it's coming from is coming from these data centers, right? These servers, these microchips, they're computing all of this. They're pretty much similar to human minds, right? And then, well, where's the energy coming from? It's coming from nuclear or solar or hydro or wind or fuel, right? Wherever it's coming from. So it's a big draw. It's a big draw. Think about it. Think about every household with gaming systems, with computers, TVs. You got all your headphones, all your speakers, all these things, right? And it doesn't have to be entertainment. It could be your CPAP machine. It could be emergency devices, right? Anything and everything is pretty much becoming reliant on electricity, even more and more and more, right? So we're stepping into nuclear. I see them introducing it, maybe regionally. Maybe the U.S. may have only 4 or 5 nuclear facilities that pump out power to all the major regions. We're not depending on Canada anymore, right? You have Trump talking about Canada so much, about that Canada doesn't work as a country. It pretty much should be a state. And we know that Canada does provide some of our power to states like New York, right? So that's a contingency where Trump could say, hey, we want everything to be in America. We don't want any help from Canada or from Mexico unless they're paying tariffs and blah blah blah. So we're becoming more nationalistic. At the same time, we're trying to bring manufacturing back to America, right? In all of these facets. So number one is energy. Like I said, energy, nuclear plants. I see the redo of the whole electrical grid, so all the wiring, stuff like that. Whatever they need to pump out more to transmit through these transmission lines and get power into our homes accurately, I think they're absolutely going to do in the future. And then that pushes the next biggest thing I see for America in the next 5 to 10 years, right? I see us pushing into the EV realm a lot more with electric vehicles. As we just saw, Donald Trump just did pretty much a car commercial for Tesla in front of the White House, right, with Elon Musk. We saw that, right? So we're trying to bring everything back to America, right? So I'm really gonna bet on American companies for the next 5 to 10, even longer than that, but 5 to 10 years until we really shake this out, because we had a big shakeout between pretty much us and China over the, I mean, it goes on long, but I'm kind of only going to go back to COVID. So let's say 5 years right now. And China's been manufacturing everything. Not this though. You got me messed up. Not this American flag. This is here, made in America. Anyways, they make everything, even American flags. You'll find American flags with made in America, and it's like, so we're trying to bring everything back into America, which is cool, right? If it's possible, if it's done right. We're seeing tons of unemployment. Great. So we should be training people, pushing people into these fields, pushing people into nuclear, right? Into electrical, understanding EVs, right? Why aren't there EV repair shops? Jim Bob's EV Tesla repair shop down the road, right? Why don't we see many of those anymore? So we have to think about what is the next step that we're stepping into as a nation, and train that workforce to really get in there. So with EVs, EV manufacturing, that brings the whole revamp of the road system, of the American road system. I see that whole road system being revamped and changed, because the EVs need to read the markings, right? And some places are experimenting with charging in the roads as well, which I don't know how feasible, really long distance wise, but sure. Let's just stick to revamping all the roads so all the EV vehicles can read all the markings, right? Well, we've had this talk for the last few years of why EVs, why EVs. You know, they this and that and bull. Okay, look, I don't believe in full EVs. Full EVs take too many. Um, they take the resources that they need for full EVs. I just don't think is really manageable, and that's really like for high class elite type folks. I'm more for the like a 50-50 hybrid. You can, with the mix of the two, you have a great range, which Toyota has done well with. But it between the resources, the minerals that you need for a full EV pack, right? Like these Tesla packs are huge and weighed out. I think like 2,000 pounds, something like, right? So I like the half and half, but I think they're really just going to keep pushing EVs, whether it's half and half or three quarters or the full thing. You know, they're just going to keep pushing it, because it's going to bring a lot of manufacturing. EVs are cleaner, right? They're a lot quieter, no smog, right? All these people that live in LA, New York City, Miami, right? They don't Dallas, they don't want to deal with this fog. And if we could push for cleaner cities, smart cities, I see over time the cities just getting more expensive and really pushing a lot of people out, and they want to keep the cities clean, right? So switching over to EV vehicles, and it's so clean and sleek and high tech, right? The charging, you don't got to deal with stinky gas, get your hands dirty, you can charge it at home, right? Once they start putting EV chargers in every house, making every house a smart house, every city a smart city, right? So I see us really going there. If you haven't read sci-fi novels and stuff like that, like it's there. It's just a matter of time, right? I really think humans and companies always want more and more and more, more tech, more tech, more tech, more tech all the time. And I don't know what it'll lead to. That's not for me to say, but I do see where it's going, right, in the future. So revamp of all the roads, bunch of new EVs on the market. What else we got in the next 5 to 10 years? Also the defense industry. I see the defense industry. It's already been ramping up, but continuing to ramp up. Will most likely be in another conflict. If it's not the conflict with China and Russia, but it never is. Over the last X amount of years, we've had a proxy war with China and Russia, right? A lot of people think we're in the Middle East fighting local tribes. Yeah, you're fighting local tribes because the Russians hired them. And then who do you think we hired as Americans? We hired the other local tribe, right? So the Houthis and the Sunnis, right? The Sunnis and the Houthis, these local tribes, they're getting paid by look, I want to survive. I want to live, okay? I'm going to take a page from my boy, the master investor. I want to live, so I'm not going to get too deep into this topic here. But I will say that I foresee a conflict coming. America's only been out of war, what, 17 years out of our entire existence, right? So think about it. So nuclear, I would say take a look at that. EVs, right? The EV vehicles, the redoing of the whole road system, the redoing of the whole electrical grid system, defense, and also this last one, microchips, right? They're bringing the microchip industry to America. They have been. They're working on facilities in Ohio and also in Texas. But the largest manufacturer, TSMC, is in Taiwan, and we're having issues with China, right? China considers Taiwan theirs. Taiwan is right off of the coast of Southeast China. So over the last few, I would say, years now, right, we've imposed pretty much bans on China and blocks so that they can't get all these microchips, right? Because that's what it is. It's compute power. Is who has the most microchips, the most money to buy this, so that they can put it into war, into defense, into airplanes, submarines, boats, all these things, right? So that's what it's been about right there. And we're bringing back microchips here to America. We already have the CHIP Act, which is distributing billions to companies like Intel. Intel's American. Yeah, I don't like Intel, but if we're going all America and we're not pushing for any foreign companies, then it may be a worthwhile investment. This isn't financial advice. So I'll leave that there for that section right there. So I'll say the top four biggest movers I see for America in the next 5 to 10 years. Number one is going to be nuclear. Number two, which nuclear and energy, so electrical, everything in energy there. Number two, EVs. And that also includes the road system, right? So redoing the whole road system and EVs. So that whole industry right there. And we're seeing tariffs with Canada and Mexico about the vehicle industry right now too. Number three, defense. I think we're going to get into another conflict within the next couple years, if not, 5 to 10 years. And then number four is going to be the microchip industry, semiconductors, that whole space right there. Those are the four spaces that are really intriguing me 2025 and just for the next 5 years in America's projection moving forward. So let's keep it moving here. But let's not forget, if this is your first time tuning to Military Wealth Club, welcome, right? I'm Mercedes, the Military Realtor, and we bring you weekly news on real estate, business, stocks, finance, and military news. As a veteran, as a realtor, as a business owner, and as an investor, I'm here to talk to you about what's going on in the world and how to generate wealth for you and your family. So tap that like and subscribe button to support and stay up to date on topics that affect your life and investments, right? That last part is pretty important. What affects your wallet, your pocket is incredibly important. And speaking of that, we have BRICS. So BRICS has announced plans for a gold-backed currency, which takes us back to when America was pre-1971, when we were also gold-backed, right? When the dollar was linked to gold. And that's what the Federal Reserve was managing at the time, managing all the gold, right? Also where it went, and then the distribution of the dollar. But when the dollar and gold were linked, you couldn't print more dollars than you had gold. And then when Richard Nixon unlinked them, right, during the Vietnam War, because we needed money, because we were going broke, right? Now we can print. Now we can print all this money with all these dollars because now the gold isn't linked. Right, and that's why we've had conversations come up recently of Trump and Elon asking like, well, and other people, where's the gold at? Right, where's all this gold that we're supposed to have, and that they're flying gold in from the UK. So who knows? But in this case, right, BRICS is announcing a gold-backed currency. So they propose a gold-backed currency as an alternative to the dollar, aiming to reduce the reliance on the dollar, right? They've been working on this since 2012, I think. BRICS was formed. 2012 or 2008, but I think it's 12. But they've been working on it. They're also working on a cryptocurrency that's more between China and the Saudis, I believe. But this is a big thing. People aren't considering BRICS versus NATO. When I talk about BRICS, some people say, oh, it's an economic alliance. It has nothing to do with NATO. And I'm like, yo, when it comes to money, if you guys are beefing about the same, look, if you and your clique, you got two different cliques, and this clique over here is messing up your money over here, right? Or everything has to run through this group right here, and your group has to always ask for things from this group. Eventually, you're gonna get tired. Eventually, and let's say you come up, you got some money in your pockets now. Now you start looking at each other and you say, hey, we could take on the big guy over here that's been running this, right? And that's what's going on. That's what's been going on for so long with China and Russia looking at America saying, look, we are tired of you. We're tired of the whole world running off of the dollar. We want to de-dollar, right? Think about it. All wars started from banking. So this is a big deal. The people aren't realizing this transition, right? Bitcoin coming up, crypto, all the whole crypto thing, and it's going up, and now it's going to be possibly the reserve system, right? It could be the reserve. Trump wants the U.S. to be the capital of crypto. So why wouldn't BRICS be versus NATO or BRICS be versus America, whoever we get together with, which is usually NATO, but that's exactly what's happening. They're getting off of our whole dollar system. They're not doing deals in dollar anymore, right? And that's what this is. That's what this all comes back to, right? Is power, control, money, all that stuff. Nothing to fearmonger at all, because our job is to figure this stuff out and swim in between these sharks and these whales, right? We really have to swim in between them, not get eaten, stay out of the way, make our wealth, and keep things moving. I'm not here to change the system, to try to take down the man, anything like that. Look, I'm all for being a revolutionary and doing what you got to do, right? Standing your ground. But with this system here, you have to learn how to play the system. Your life will be so much better when you understand the game and you can get in the system and move left, move right, move up, move down, instead of trying to really distort reality, right? Instead of what should be, things should be this way. Oh, this is so messed up. No, learn how to play the game like everyone else. Stay legal, right? I think everyone remembers when Trump was saying, "Oh yeah, I don't pay any taxes," and it's because, well, it's the law. If you don't like the law, change the law. You know, me and a lot of your friends use the law, and we take advantage of it to not pay taxes. So if you don't like it, change the law, right? It's the same thing with real estate, business, stocks, finance. Learn the rules of the game and play the game. That's it. That's half of it right there is we don't even know that there's a game being played. That's the thing. People don't understand money at all, where it comes from, how it flows, right? Currency. Why would it be called currency? Because it has to continuously flow. You have to have a business or a job or whatever it is, and money has to keep flowing, right? And that's how these wealthy people really keep their circles together, is because they're pretty much trading money and assets between each other. They're just all in different industries, and this money just goes around, and then they get incentives of it. They get tax write-offs. They get tax deferrals, right? There's levels to this. So number one, I want you to realize that you're in a game, in a financial, business, real estate, stock, finance game. This is a big game that they set up at a mass level. And at the end of it, they're just trying to milk us for our money, right? They're trying to get you to go to work. They're trying to get you to spend money on consumerism, on things that you don't need, right? That's why there's holidays spread out throughout every year at the same time, to get you to spend money on all these things that you have to spend money on, right? To go get the house, to keep up with the Joneses, and the car, and do all these things. So tell me, you go to work so that you can earn money to then pay the nanny to watch your kids, but you need your kids to be watched only because you have to go to work. So tell me how that system makes any sense. And then someone else is raising your kids for the last 18 years. You got no time with your kids, and then you wonder why they grew up nothing like you, or with your values, or what you wanted them to grow up with. Because they got raised by other people. They got raised by nannies. They got raised by preschool. They got raised by the grade school all the way up until they graduated. They went to college, their friends. How much time did they actually spend with you? Right? Nowadays, kids are spending more time with their phones than they are with their parents, learning from them. So, right, this is what I try to talk to people about, this vicious cycle that we get caught in, right, where we're just trying to provide so much, right? Provide financially so much for our family, financially so much, maybe because we didn't grow up with that. But at the same time, we're missing the point that we need to spend more time with our loved ones. And that if you have children, you know that when your children are around, they just want that time with you. They're not looking for daddy's dollars. They're not looking for that, right? I mean, so sometimes they may come and ask you for a dollar or two when the ice cream truck comes by, right? But they're not here trying to get you for money. They want your time and your attention. And I want you to spend more time and attention with the people you love, doing what you love. So that's why we talk about real estate, business, stocks, and finance and wealth here. It's normal to talk about wealth and that you want to make more money, right? People shriek when I tell them, I'm like, I want to make $20,000 a month. A month, right? Do the math on that. Do the math on that. Tell me how much. 240,000. 240,000 a year. 20,000 times 12. That's not too far. It's not too far-fetched. I promise you. You deserve wealth. You deserve abundance. You deserve time off. You deserve to do what you love, what you're passionate at, what you're proficient at, right? And what brings you purpose. You deserve to do those things. But we just have to keep watching stuff like this, watching shows like this. We're getting information. We're learning. It's becoming normal, right? We're listening to this in the car. We're listening to this on an evening, right? Where it's not, I'm not Jim Cramer on here talking about the stocks, right? We're not here to be riled up. This is we're talking like you're at the barbershop. We're talking like we're face to face here, like a buddy of mine, right? That I just be having lunch with. And we just want to talk about whatever it is, right? You know, how much time do we talk about gossiping about other people, celebrities, sports teams, all these other things that don't make you any money? They don't make you any wealth at all. Now, they're pleasurable by all means. Please watch your sports, talk about your sports, your celebrities. Please do. I do that too. Very limited. I don't gossip though, first of all. No gossip. The other stuff, celebrities, some entertainment, sure, but very minute, right? And you have to change that perspective and not think of it as a profession, as studying, as right. It's work. It's a little bit of work on whatever you want to be good at, but it's more entertainment because to me, at least to me, what can make me wealthy, what can help me do the things that I love doing, right? Pay for those things with the people that I love doing, and it gives me freedom and it gives me money, energy, and time back, right? That's what I'm interested in. Whether the Dolphins or the Broncos won or lost, unless you're a sports speculator, I don't call you guys, I mean, sports bettors, whatever. Sure, it could make you money. We know the odds there. I'd rather take my business to real estate, business, stocks, and finance. And that's what this is about, just to make it normal, to make it a casual conversation. So let's keep going. The last thing was BRICS versus NATO. Don't forget it. Google BRICS, learn about BRICS if you don't know what it is. BRICS is an acronym: Brazil, Russia, India, China, South Africa, right? And we have Saudi Arabia. I don't know if they're actually in BRICS, but they've been working with China and stuff like that. All right, we won't get too deep into that. Okay, so we have AI layoffs, right? As automation and cost cutting reshape the tech world. Of course, we got introduction of a new tech boom, right? That's why I feel like we're really in the 90s. I feel like we're really in the year 2000, maybe even 2001, right? And think about it, 2001, you got President Bush coming, Jr. And then what happened in the fall of 2001? I just want y'all to think about that, right? Where we're at too, what we got going on in the economy. I don't know. Look, history doesn't repeat, but it sure does rhyme. So don't forget it. So we have a bunch of layoffs because of tech, right? So AI-driven automation is causing massive layoffs, with unemployment in IT rising to 5.7. Now, don't forget that unemployment was reported in February as 4.1 overall. So it's higher than the overall, right, of all jobs in America. IT is higher. That is a concern. And actually, look, I read this wrong because my eyes are lopsided, apparently. I blame it's military service. Don't blame me. I said 4.7, IT unemployment is 5.7. Okay, so that's a whole 1.6 percentage above the national number of 4.1. So that's just something to consider. And that's up from 3.9 in December. So from December, right, to most recent report, we've gone from 3.9% of unemployment in the IT sector to 5.7. It's growing. It's growing day by day. Day by day, I'm telling you. You have major firms like Google, Microsoft, they're cutting jobs as AI takes over key roles, right? This is the same thing that happened in the 90s. Ask your parents, ask the techies that were around, ask ChatGPT, ask Google, ask whoever you want, right? They will tell you that there was a lot of layoffs because you have all this introduction of tech, all this new type of productivity, and then over time, maybe they shift to something else, a new profession, right? I feel like we're really going to move out of tech. Well, no, we're gonna move out of the tech developers, right? Tech software engineer. Look, I don't even want to use those names because I know there's developers out here and engineers are gonna be like, this guy doesn't even know what he's talking about. He can't even use Control Delete. Who knows, right? So look, what I'm saying is I think we're gonna bring tech manufacturing here to America, but when it comes to those paid roles that they needed humans for, a lot of them are going to disappear. So I feel like that it's going to transition from being those roles of developers, programmers, things like that, those soft skills, and it's going to transition into manufacturing of those chips, of those servers, and stuff like that. So we're going to need more workers, more Americans to do work in Ohio, work in Arizona, work in Texas at these microchip factories instead of necessarily on the higher side, especially because we're using a lot of H-1B visa workers too from India. So that is something to consider as well. All right, so we got AI tech layoffs. I'm not going to beat this dead horse, but it's something to consider. All right, because if we have, like we said before, an increase, elevation of unemployment for a consistent amount of time, 12, 24, 36 months of 6, 7, 8% unemployment, that's recession all day, right? And don't let these folks lie to you. We've hit recessionary signals already. Not this year, not last year, before that. Just look at it. Now, the data that comes out, though, they do adjust it later on. So a lot of initial data that comes out, they'll readjust it months later because they're taking forever to get it to culminate. I think it's a lag effect, though. But they have this data and they know what's going on before we really know what's going on. So we have to have that future vision of looking forward, right? Things can be too good to be true. Things don't just go up forever. You have to come down for momentum to go up into the next market cycle. Don't forget it. So if you're listening to people that think the market's never going to crash, it's never going to go down, it's never going to correct, right? We're not talking a zero crash. Look, I don't want you to think that your home's property value can go from 700,000 to $0 over the overall market consensus. If that is an issue, if we have an issue like that, or we have stocks go to zero, you have a bigger issue than it coming back. We're talking like World War III nuclear level type stuff going on. Okay, so consider that. All right, y'all. We're gonna jump into our weekly real estate snapshot here, and we do this every single week. And these are special metrics that come out, but we want to make sure we're up to date every single week. So I provide this here at Military Wealth Club. So number one, current interest rates. All right, so a regular conventional 30-year fixed loan. Sorry if you're not VA. There are other options too, FHA as well. But the 30-year conventional is 6.78, right? That's about 4 basis points lower than last week. Now, we also have a VA loan 30-year fixed. That's at 6.24%. And that shows about no change between this week and last week, right? There's not too much movement out there when the Federal Reserve isn't pushing stuff up or down, or if the bond market isn't really reacting well. So a lot of these rates, right, they're taken from what they borrow from the Federal Reserve, of course, and then what their lending company has. So they may have some overlays, some additional fees and stuff like that, and there's a spread. And that's where they come up with this number of about, for the VA loan, about 6.24. But it adjusts. And I always tell people to shop around your loan. Take that first loan that you got on that property that for that pre-approval, go and shop it around as soon as possible, right? Because most likely you're in the middle of a transaction. So line up those lenders, go shop it all around, go with the one that overall produces the best service for you, the best rates for you, right? And it's not only about interest rates. That's not the only thing, right? You have to, there's APY, there's APR. You have to know the difference. You have to know their overlays. You have to see if there's any additional fees, right? We can get into other things that don't relate necessarily to the loan, but we won't right now. Okay. So that's interest rates. Like I mentioned, 30-year fixed conventional, 6.78. You have the VA loan, 30-year fixed, 6.24. That's more than 0.5 of a spread. Pretty good with the VA loan, right? All right, next we have, this is one of my newest favorite metrics after talking to this really intriguing and smart stats and data person, but the percentage, pretty much the ratio or percent, whatever you want to say, of the list price received, right? And the median days on market. So these two metrics right here, I dig them both. So the list price received, right? 98.9%, which means whatever they first listed it as, let's say they listed it for 500K, they got 98.9% of that, right? Gross, which isn't bad at all. That's very close to asking. And in some areas, right, it's way over asking. Real estate is super local, right? What I'm talking about here is nationwide, right? It's just a nationwide broad picture. But your local area, it may be, right, you know there's a specific area that properties you would just love to live there, right? Those properties may fly off the shelves in 10, 15 days, right? Days on market, and they may, let's say, they maybe even quicker than that. But let's say they're listed for $1 million. You see it all the time. Oh, you got over asking $1,050K, 1.1, right? So that's when the percentage would go at 101%, 102%, 103%. But 98.9% is pretty good, right? It's pretty good. They're getting pretty much very close to what the sellers are asking for. So for a buyer, if you're in the market, this may interest you because you may be in a buyer's market, depending on where you're at. Of course, everything is hyper local. Real estate is super hyper local, but it may be a buyer's market that may benefit you if you're a buyer. Right? If you see this data and you know that the area you want to buy in, man, the list price ratio is pretty low, right? Of what they're actually getting on what they list it for. Maybe I can come in here and get a deal. You know, maybe it's pretty low. Who knows? All right. So next we have median days on market, right? Median days on market are the days that the property is listed on the MLS, right? How many days is it taking for this property to get under contract, right? This isn't complete until close. It's how long is it until contract, or it's back. It can come back on the market as well. That time will start back up, and it will still take up this time here as well. So you can go under contract in 10 days, and then the deal fall apart. You come back online, and it starts back up at 10 days again. So while you're under contract, it doesn't take that time into the days on market data point. But we like the median days on market. Now, right now, for the Denver metro region, it's about 60 days. So 2 months of properties on market, right? Now, that has gone up from about 52 days from the last report. So about 15% increase. Now, we're also seeing a ton of properties flood the market because it's about to be spring. I consider it spring. But Denver has fake spring. So do not get bamboozled by Denver's fake spring. It'll get you and you'll end up freezing your butt off. But we have a lot of properties coming on the market because it's spring. A lot of people don't want to sell their house in the summer. Summer is still very much elevated compared to winter, but we have an influx in which position? Let me see. We have an influx that comes in the springtime, and then it does come down a little bit in the summer, but then it goes down further as winter comes down. So the more you know. All right, let's keep going here. So, man, this week we got the word of the week, and that is amortization, right? What does that even mean? Amortization? What? Okay, so the definition is the process of gradually reducing debt through regular payments covering both principal and interest. Principal and interest, all right? So paying off a loan bit by bit through regular payments until it's completely paid off, right? So with the 30-year mortgage, each monthly payment gradually pays down the loan balance until it's fully repaid. So, for example, we'll talk about a mortgage here. A mortgage is made of 4 key parts. I want you to think of pity, right? Think of Mr. T. I pity the fool, right? So P, but it's spelled differently. It's spelled differently. So you have P-I-T-I, principal, interest, taxes, and insurance. So right here, we're going to talk about your principal and your interest, right? Your principal is what you're purchasing the property at. Hey, I bought that property for $500K. Great. $500K, that's what you guys do the deal on. It closes on $500K. Great. Now, interest gets thrown onto that as well. That's why your loan is not going to be $500K total, right? There's a whole another part that gets amortized over the entire life of the loan, and it's constantly being updated. So that number, that percentage is always based off of how much does this person currently owe on their principal balance, and then the interest is affecting the principal off of that. So P-I-T-I, the word of the week is amortization, right? They give you a schedule. When they give you a loan, they give you an amortization schedule. They show you how everything's going to play out over 30 years, right? And that could change if you're doing additional payments. If you do maybe a yearly payment once a year, that is extra, right? And you add it completely to the principal. You do that over years, you could shave years off of your entire mortgage, right? Imagine doing that for 7-8 years. There's a stat out there. It could, if you do that for the first 7-8 years of your property, and you do one initial, not one initial, but you do one complete mortgage payment, but you put it towards your principal, and you do that, once a year for the first 7 or 8 years, you can shave off something like 8 years off of your entitled loan, right? Your entire loan. So something to consider there. All right, let's keep going. And we have the next Federal Reserve meeting, right, which is March 18th. So next week, right? The probability of it, 98% of no rate change and a 2% likelihood of a rate cut of 25 basis points. I really don't think the Fed's going to make a call here. We see inflation slightly creeping back up, right? And when inflation, usually, this is one of the controls that the Federal Reserve uses, pretty much a lever, but as inflation is creeping up, they don't want inflation to creep up any higher, and they start bumping up the rates, right? So we have inflation going up, right? We have inflation going up, and they start bumping up the rates so that we stop spending. So we try to curb inflation a little bit and bring it down a little bit, because inflation is made from spending, from printing, but what they don't tell you is that most of the inflation is made from government and corporate spending, not us. So it's not you going to buy a new pair of jeans or a pair of shoes or anything like that, right? It's these bozos spending so much money, printing so much money that doesn't exist. All right, so that was the weekly real estate update, and let's keep it moving. Let's keep it moving here, man. So what we've seen recently in Wall Street, all right, with the stock market of just tanking, right? Pretty much since Trump coming in, and a lot of us could have foreseen this because they don't like Trump because he's volatile for the market. He's erratic, emotional, right? They like people that once they know their profile, they can pretty much guess what they're gonna do, have a good bet against it, speculate. But with Trump, it's who knows, like who. I don't even know. I don't even know what, I don't even feel like the craziest thing has been said yet. Like it just, I just really don't think that the craziest stuff has been said by him yet. It's just right? Greenland, people are like, oh, it's so random. It's really not. First of all, it's strategic, and then we talk about Panama, right? Well, the Panama Canal pretty much got bought out by BlackRock, and BlackRock is I'm not even going to say what they are. Like I said before, I want to stay alive, but just, you can do some research in that. You can do some research in that there. But look, the S&P 500 has fallen over 10% from its recent record highs. All right. So this is signaling the first correction since 2023. All right. We have market volatility being driven by fears of tariffs, like we were just talking about, a slowing job market, and uncertainty over the Federal Reserve and what they may do. That's why this connects right to their meeting that they're having on the 18th. This all connects the Federal Reserve, bonds, stock, business, real estate, military, defense, geopolitics. This all connects. That's why we have the show every single week. So Wall Street it's hitting corrections. We've been calling this. We've been calling the top, guys. Warren Buffett's sitting on the most cash he's ever had. Mark Zuckerberg sold a bunch of his stocks. You have Jeff Bezos sold a bunch of his stocks. You have Mark Cuban, right? You have a bunch of people. Why would they sell their stocks, a ton of stocks that they've never sold before, unless the market was ringing in the top or coming very near, right? They can't do it the day before. They're going to get caught up. They have to do it over time and get out. And I feel like the market has been signaling and yelling that, hey, I'm getting to the top. I'm getting to the top. And you have to come back down and correct a little bit in order for us to get into the next cycle. Now, who knows how far we're going to go down, how far we're going to go up. You never know, right? You never know. You never know, Rod. Well, let's do this exercise. We'll do this exercise right here. All right. Pretend that this is whatever company you like, and the market's going up, right? The market's going up. I want you to stop me when you think it's gonna stop going up. Boom, right? If you didn't catch it, you didn't catch it, right? So now we're going down. When is it gonna come back up? Just like that, right? So no one has a crystal ball. No one has a crystal ball, but success leaves clues. These people leave clues, right? They have to report that they're selling billions of dollars, millions of dollars of stocks, that they're doing this, they're doing that, right? And we have to use history to apply it to the future just to see some patterns and really understand where we're going in our trajectory and connecting all these webs. It gets so confusing. I've got to do tons of research to have this show, to disseminate, to help share this information. I love it. I enjoy it though, but I don't like using but anymore. And it can still be confusing connecting all the dots, right? Because they're a lot of them are from very different sectors, and you would think, well, why does this matter? This really doesn't matter, but this directly jumps all the way over and connects to this other topic that you would have no idea, right? And that's how these catalyst events start and these dominoes start falling, and things are so intertwined. But I find it fascinating. It's a beautiful web of wealth. Let's call it that. So keep an eye on Wall Street. If you got stocks, keep an eye on them. Nothing I say is financial advice. You do what you would do. I think a lot of people should have taken a lot of money off the table prior to a lot of this hype, especially with the inauguration and stuff. It's just a lot of hype and drama and stuff during this presidency inauguration and stuff. So taking your money off the table earlier, taking some profit would have been great. And then as these companies are going down, if you love these companies, if they're still great companies, right? Mr. Market does what Mr. Market does. Mr. Market is emotional. Mr. Market is the American psyche and investor psyche, but that's what it is. And you have to be able to read that and to know that. And when they go left, you got to go right, right? Warren Buffett said it. When everyone is fearful, you got to be greedy. When everyone's greedy, you got to be fearful. So as these stocks are coming down, if you love these companies, if you trust them, if they have a good moat, if they have good leadership, if they have little to no debt, right? They have good revenue, all of these things, profit, all this stuff. If you love the company, you should be buying more of that company. You should be dollar cost averaging and buying it at a discount, right? A lot of people were, Bitcoin was so expensive. It was 105,000. It was this much. And now what? Are you buying or not? Are you buying or not? Are you going to complain? Do you want to go down to $4 again? And if it did, would you buy it? If it somehow went down to that, would you believe? I don't know what it takes nowadays to get everyone to believe, right? To have faith in your investments and in the work that you put into this and the research that you put into it. Put your money where your mouth is. Have faith in your investments. So take some money off the table when the market is screaming highs. And as the market's coming down, buy those great companies that you still love. Dollar cost average into them. And then when you think the bottom is near, when it's coming near, blah, 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 when people feel like it could never fall any further, maybe that's the top, or excuse me, that's maybe the bottom. And maybe that's where you start dumping in and buying a bunch, right? If Bitcoin was at 105 and it went down to 65, are you going to buy or not? Really, because we saw it go down to 12, we saw it go down to 15,000 just a couple years ago, and we saw it shoot back up to 65. And now we saw it before the end of the year, 100K. And there's projections of 1 million, 5 million, right? If you're listening to Trump now talk about making Bitcoin the reserve currency, think about it. This is like gold. This is like gold. I need you to think about this. A brick of gold is what? $2 million? A brick of gold? Let's. I'm gonna Google it right now. We're gonna do research. How much is a brick of gold worth dollars? Let's see. So look, an ounce of gold is almost 3,000 an ounce. An ounce. There's 400 ounces in a gold bar. Okay, look. So that's about $1.1 million. Do you think at one point gold was worth, a brick of gold wasn't worth 1.1? It was maybe worth $10,000, right? American dollars. Who knows what? Maybe in 1859. I don't know. Right? And over time it goes up because the amount of work to extract it is still the amount of work that it was back then to get it now, to pull it out and bring it to you, right? Through history, gold has been the number one currency to survive. Now, what if it was digital, right? You already have Donald Trump and others called Bitcoin digital gold, right? Once there's this amount, right? Think of gold, but you're not digging it anymore because Bitcoin eventually is going to hit a cap. I think it's at about 21 million Bitcoin, it hits a cap, and then it stops being able to get mined, right? So imagine if we were mining gold for so long and eventually we knew somehow, I don't know how we would know this, but that all the gold was gone from the earth. We extracted all of it. There was no more to extract. Do you think the price of gold would go up or down? Right? Based off of supply and demand economics. Supply and demand. Supply and demand. As simple as it is, if we just look at supply and demand, the more of an asset, of a resource, less valuable. The less of that asset and there is demand for it, the more expensive it's going to be, right? That's all it is. So if over time, America's stocking up on Bitcoin, Russia's stocking up on Bitcoin, all these countries are stocking up on Bitcoin, everyone's stocking up on Bitcoin, and then there's no more. In 10 years, there's no more. In 5 years, there's no more Bitcoin. Then those who have the Bitcoin have the power, right? That's the golden rule. That's the golden rule. The one who holds the gold makes the rules. That's the golden rule. And if the gold now is Bitcoin, the one who holds the Bitcoin makes the rules, right? So I just want you to think about that, all right? I'm not here to tell you to invest in Bitcoin. I'm not here to tell you invest in the stock market, period. At all. You do what you want, right? I believe you should diversify, invest in real estate, business, stocks, and other types of finance. That's up to you, right? I'm just here to report what I'm seeing, and that's it. Okay. All right, that's it. Man, we got treasury yields, right? Also rising. A lot of people don't know about treasury yields, bonds, pretty much at IOU. The bond market really, 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 I'm not going to say runs America, but it's embedded in America, pretty much linked with the stock market, all finances. A bunch of countries have bonds for America, which means we promise to pay them back at this interest rate plus what they gave us, right? Because we need to use that money for XYZ. Now, there's countries like Japan and China that have a ton of U.S. bonds, and if they dumped all of them, that'd be a storm. So that's something in their back pocket. That's something to keep note of, and that's something that you can also invest in. You can invest in bonds as well, and you get a return. A lot of people like bonds instead of stocks because they provide that return. You know, that's it. It's almost like if you know dividends in stock, similar but not, but similar. It's hey, you're gonna get maybe a lower return, but it's consistent over time, and it's a promise. So with the bond, it's a promise from the U.S. government. So they they've risen to 2.8, causing a sell-off in equities as investors anticipate fewer rate cuts. So you see how the Federal Reserve rate cuts relate to the bond market, which then relate to the stock market and the housing market, and everything else comes together, right? So keep your eye on this. Keep your eye on bonds, or just come here and watch this and we'll talk about bonds. How about that? All right. What else we got? We got the housing market is cooling as mortgage rates remain elevated. Yeah, I mean, I would say so. Like I mentioned before, in the spring here in Denver, we're having an increase in listings as always, in places that have a winter. Usually there's an increase in the spring and the summer months. So the housing market is slowing, with home prices declining 1.2% year over year in Houston, right? In Houston, that's a different demographic, right? Denver, we're seeing a little different numbers, and then, like I said, nationwide, even more drastic. I would really nationwide numbers are great, but if you're looking to do something specific, I would look up your zip code. If you want to specifically invest in a specific area, which you would have to, I mean, pull the data from that area, all right? Pull the days on market, pull the close to list price ratio, right? Pull that data and study your local market. Real estate is extremely local. All right. Man, what we got next? So the Federal Reserve faces political scrutiny over the inflation strategy. Look, Jerome Powell cannot get a break, especially with Trump in. They don't like each other. So there's apparently a new task force that's investigating the Federal Reserve, and how they're handling inflation, right? Which is really it's big business. Big business corporations, multifamily builders, they want lower rates at whatever cost. They don't care what it's going to cost the rest of the economy. They just want low rates so that they can borrow money and continue on with their businesses. So it's interesting, seeing now that a certain someone's in the White House now. So we have critics that are arguing that recent rate decisions are not sufficiently addressing the economic instability. What do you call the end of last year? We had 100 basis point rate cut. We had a 50, and then we had 225s. Like, how much quicker do you want this, especially coming out of COVID? People really don't understand how big COVID was, and how it shook up the whole economy. And the reports of China, causing it, all this. I told people, I'm like, look, China's number 2. They're right behind us. They'll do anything to try to level the playing field, because chaos is some of the best times to overtake your opponent. Create a little bit of chaos. They don't know what's going on. You have a little bit of insight, maybe because you created the chaos, but maybe you get on your footing luckily before them. But that's what you needed to get those 5 yards ahead of them, was that little trip up, that little gamble of look, if I don't do this, they're gonna gap, right? And I'm never gonna catch them. So let me try something. So that's what I see with COVID and China there, and that affects everything. That's exactly why we're going through a lot of what we're going through right now. And don't think that China isn't going through stuff either, and other countries aren't, right? Germany has had economic issues. Britain has had economic issues. China's going through crazy real estate stuff. They're comparable to 07, 08, our great financial crisis, GFC, in 07, 08. So don't think that it's only America's going through some hardships, right? And that also raises up a lot of other alarms too, right? If it was just America, which usually with major countries, the economic recessions don't happen when it's just them. either. It's more of a global level, especially with the amount of influence and trade that goes on. You can have a random country go through something and it not necessarily affect, right? If Bolivia went through a recession, the whole world's not going to be like, oh Lord, we're going down, right? But if China go into a recession, if America goes into a recession, if a lot of Europe goes into recession, hot water, right? And those are just red flags, things to look at. Like, okay, this is at a global scale. What was also at a global scale? The GFC 0708 time, for certain folks. All right, let's keep going. Let's keep going. I don't want to get too deep into these weeds here. We got reports of veteran benefits being expanded under new VA policies. We know the PACT Act, that has been a thing out. But look, if you were around burn pits, you're around loud jets, guns, hazmat, all that stuff, Google PAC Act, hit up your VA, hit up your VSO. If you need help finding any of that information of VSO, leave a comment, send me a message, send me a pigeon, whatever it is, and I'll try to help you out here. But you should get the benefits that you deserve, right? No matter if you served 5 years ago, 10 years ago, 20 years ago, you know what I mean? If you were a nom, you're a victim of Agent Orange, whatever it is, napalm, you got to come, right, and get what you deserve from the PACT Act. Whatever's under the PACT Act, come get your benefits. You deserve them. Don't think that you needed to lose a limb. You most likely have trauma, right? We'll just start there with some PTSD, some other stuff. I'm sure you've seen tons of things. I'm sure you had a lot of stress, a lot of undue stress that was unnecessary, all this stuff. Look, go get the benefits you deserve. I'll leave it at that. All right, veterans, go get the benefits you deserve. All right. And actually, you know what? Actually, before I forget, man, make sure you tap that like and subscribe button, please. Come on. Tap that like and subscribe button to support and stay up to date on topics that affect you and your investments. That's it. I don't know if you're liking this stuff, if I should make more content like this, if you don't hit that like button and if you're not subscribing, right? And then when I put out new content, you're going to miss it. And you're not going to stay up to date if you don't have the notifications on. So click the notifications, right? I don't post too excessively. I'm not out here posting junk. I'm out here posting stuff that is literally providing us value and hoping to make you wealth by you putting these plans, these ideas into action. All right. So let's keep it moving. So like I mentioned before, we saw Bitcoin drop, right? So he ordered the creation of the strategic BTC reserve, like we were mentioning. And we saw it drop. I mean, 5% drop, but the reserve, right? The reserve that he's trying to create, it's going to be funded using seized Bitcoin assets, right? So I want you to think about this. Where Trump announces the strategic BTC reserve, and they say that the BTC reserve is going to be funded under seized Bitcoin assets. So I really want you to think about that and follow that, do some research on the Federal Reserve 1913 and what happened after the Federal Reserve was created and how they made an order and they were confiscating gold. They were seizing it, right? Why were they seizing it? I mean, they wanted to stock up the reserves that they had now. We're on the gold standard. We have to be linked. We can't print unless we have gold. So we got to go get a bunch of gold so we can keep printing, right? Well, where are we going to get it from? Well, we're going to take it from the citizens. And we'll trade you our greenback, our dollar, right? We'll trade you for it, but we need the gold. So come up out them pockets, give us the gold. That's it. What if that happens here with Bitcoin? Right? What if in 5-10 years they say, hey, we gotta stock up the reserves. We're gonna make it illegal to have Bitcoin. You can't have Bitcoin. You got to give it up, trade it. We'll give you another crypto, XRP or whatever, USDC, USDT, whatever we're using at the time. We'll give you something else, but we need the Bitcoin, right? Suspicious, very suspicious, and it's a concern of mine because in this crypto world, everything can be identified to you. Everything can be tracked. Unless you really, 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 really know what you're doing, Everything can be tracked down to you. And I think that's the whole point. They want to be able to tax every single transaction. They want to see every transaction. Your grandma won't be able to give you $100 anymore, on Christmas, or usually it was like $5 or $10. But whatever, she won't be able to give you nothing. You know what I mean? So you really have to think future about this. If you are stocking up on BTC, I want you to think about, how do you stock up BTC on a cold wallet without any KYC, any identification, right? I want you to do some research on that, and maybe that'll help you in 20, 30 years when they come kicking our doors down looking for Bitcoin. Man, and so we're just talking about global issues, right? Well, Europe is facing a liquidity crisis in the banking sector, okay? So the banking sector, I keep telling y'all, the banking sector has started all the wars. Everything comes from the banking sector. Follow the money. Never forget that. So several European banks, including Deutsche Bank, which I think has, I want to stay alive, so I'm not going to say that. Deutsche Bank, do your research on them. I'll say that. And Credit Suisse, I'm not European, but they're facing liquidity concerns as rising interest rates and economic uncertainty put pressure on their balance sheets, right? So they may have a lot of assets that they're negative on, that they're losing on, like we have here in the US with commercial real estate. A lot of banks, they don't have to report this stuff until the items are sold, right, or written off, but they have these losses that are sitting there, and they're hoping. That's why they want the reserve to cut rates so much. There's a lot of multifamily, a lot of deals that matured, and that when these deals, unluckily, but when they mature and they hit this time frame of higher rates, they weren't planning for that. They were doing this planning when rates were 3.5%. When rates were 3%, this was years ago that it took for this multifamily to get scheduled, permitted, created, funded, and finally now they're here building, and they have to reborrow money to continue with the loan. But now they're going to reborrow it at 7-8%. You know what I mean? So there's a big issue in the banking sector, and when it comes to just real estate, period, and assets. I'll say real estate and assets, mainly commercial real estate. With the work from home, with COVID, we just saw a lot of people leaving the office spaces, and then they're dropping in value because they're just empty spaces. So you have these family offices, which are what really, 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 really rich families come together and buy these buildings, buy these whole buildings as an investment for whatever, right? Imagine having a really rich family and you guys buy some huge building in New York City or something like that for a future investment. Wild, right? So Europe is facing something like that right now. And their Federal Reserve, their European Central Bank, is considering emergency measures, right? And that sparks fears of, well, can that spread over to our U.S. financial system, right? So that is a concern. That is a concern. The liquidity crisis, right? A lot of people are like, what is liquidity, right? Liquids. We got liquids in banking now. Look, it's just a term used for liquids. Yeah, no, anyways. It's relating to bank, and when we're talking about liquidity, right? For example, if we want to compare real estate to stocks, right? For example, I can sell my stocks a lot easier, a lot quicker than I can sell my real estate, right? So stocks are more liquid. They're a more liquid asset, right? Compared to, now when it comes to banking, they have liquidity, right? So it's a little bit different, but they have liquidity. And if they're running into a crisis of it, where certain banks, when it comes to banks, when you go leave your money at the bank, they don't keep all that money there, right? They're loaning out all this money, right? It's sometimes at a 10-to-1, right? So for example, you bring in all your money, they have a limit of how much of that money they have to actually keep. All the rest of that they can loan out, right? So they're loaning out, right? Let's say you deposit 100K, right? 90K of that, boom, out the window. They're maybe keeping 10K of it actually stored somewhere, actually on file. The rest of the money, they're loaning out 10-to-1 or whatever their ratio is. So they're loaning Lamar and James and Kevin and Landy and Tehran, all my homies, they're loaning all these folks, right, the same dollar, the same $1. How does that work, right? And then we run into an issue where things get tight, and really when people start taking money out of the banks, that's a big thing, right? If you look in the 1930s with the Great Depression, that's what really caused a lot of it, was a lot of people saying, I want my money now, give me my money, and all these banks being like, we don't have your money. We've loaned it out. It's going to take, we can't call all these loans due and blah, 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 and all this stuff. And then boom, a crash. All right. Something to think about. All right. Let's see. We got China ramping up AI investments to compete with U.S. tech. Yeah, of course. I'm surprised they haven't taken Taiwan yet, which I feel like they're really moving towards slowly but surely. But I think we have a symbiotic relationship where they're not going too crazy yet. They're not set up yet, and also it's letting us set up our manufacturing here in the States. And then I think they'll escalate like a Taiwanese type war to generate and fund money through the defense sector. But that's why like we're waiting, because to me I'm like, why hasn't China moved on it? Well, they don't want the full force of America, because if America's not set up yet, we're gonna get pissed and we're gonna say, no, we're gonna fight for Taiwan. But if they wait about a year, 18 more months, maybe 24 months, we'll be online with our manufacturing, and then we'll be okay with them taking Taiwan, and maybe we'll fight about it. Maybe maybe we won't. All right, so they're ramping up their AI investments. The China government has announced a 500 billion AI investment plan to compete with the US and Europe in AI and semiconductor production. So this is heavy investments in quantum computing. That's a big deal. AI chips and cybersecurity. That's also a big deal. Cybersecurity, I love that sector. It's one of my top sectors. Just think about it. You need to secure all these electronic devices. Your car's going to get hacked, man. Come on. So all this poses a major competitive threat to companies like Nvidia, Microsoft, and Google. So think about it. These titans, they're out here banging it out over semiconductors. Why? Because it produces computing power, it produces productivity, it can produce work, right? Work that would save from having humans to do it, and then they could then multiply this. We're pretty much using human labor to leverage AI to even make it exponentially better. It's just a toolbox, but whoever's running AI, I really feel is going to be running the world. Just as we've seen with tech, we've been at the leading edge of tech for decades, and that's really what's been keeping us going and afloat. So, man, so how about this? Let's talk about some tariffs, right? We have Trump putting tariffs on the EU, and the EU sparking back, saying, "Nah, we're going to retaliate. We're going to." So how is this impacting U.S. trade? So we have President Trump imposing 25% tariffs on European steel and automotive imports, right? Which led to the EU putting retaliatory tariffs, right? Hold up. Retaliatory. There we go. See, I didn't just want to skip over that. Like, I don't know how to say a word. That's crazy. Retaliatory tariffs on U.S. agriculture and tech exports, right? So this move is expected to raise inflationary pressures in the U.S., right? So we just talked about inflation ticking upwards, right? Ticking upwards. Well, I mean, this month we had a tick down, actually. We had I think it was a 0.02 tick down in CPI. And also in the core. So from 3.1 to 2.9, but the month before that we had inflation reaccelerating, right? So how are these tariffs really going to affect us down the line? And just so you know, these companies don't pay the tariffs. What they do is they just jack up their prices to make up the difference, and then we end up having to pay for it, right? So who does this really affect? This tariffs. It's more negotiation tactics. He's a bully. Trump is a bully. That's just what it is. He's sitting on America, just saying, "Oh, what are you guys gonna do about it?" That's his negotiation tactic. And people are gonna say, "Okay, well, it worked." Is it working? If they're coming back with retaliatory tariffs, if we're having all these issues already, we're about to destroy the automotive industry. We're having issues with steel, right? We're already having issues with our labor force decreasing, when it comes to real estate and just in general, real estate business, all these immigrants, right, getting deported. We have tariffs on Canada when they have 60% of our lumber, and Trump saying, "Well, why are we getting our lumber from Canada? Because they got the trees, man. They got we got a lot of trees too, but we don't got as many trees as them. Let's be real about it." So then we got to look at public lands, right? What if he starts, which I think he's already motioned that, but fracking on public lands to make up what we may need in oils, right? And then I guess why not chop those trees down too? And that's what they would also do. So, and that's bringing in private business, So if you see the theme here, it's a lot of let me bring private business to get into everything, whether it's the government, right? Whether it's through our manufacturing, through lumber and steel. It's how am I pretty much privatizing everything, right? Where just corporations run everything. And I'm not here to advocate for or against. It's just very intriguing that the businessman comes in and wants to put all of his businessmen in positions of power. It's sure, you can call it draining the swamp. You're draining the swamp from politicians to corporations. Just clear as day. That's as much as it is. Now, I'm not here to say it's bad or good. I'm not here to say that at all. Like I always say, we're here to figure out the game and swim between the fishes, or excuse me, between the shark and the whales. That's it. All right? That's it. All right? So there's no politics of this or that. Look, we just care of what this is actually doing to the market and if we can make money or not. That's it. All right? Man, and once again, do not forget to tap. Like I'm gonna put a reminder. Tap, like, and subscribe. Like it, subscribe it, hit the little notification thing so you don't miss any new episodes, right? This is all weekly. This is based off of everything that just happened this past week, right? So if you want to stay up to date and use this to project forward so you stay current, right? Hit that notification so you can stay up to date with this. All right, let's keep going. Let's keep going here. All right, as we got retail sales slump, right? These sales are slumped, right? We got consumer confidence declining. It's just the truth. Things cost more money. We've had housing go up. It's like 4.7, right? Housing costs. We've had food costs go up, right? I think like 2.1. What are we to expect here for the average person, working person here, right? It's getting more difficult every day. So yeah, you're not going to be able to go and spend and buy this and buy that and buy the new headphones and buy this and you shouldn't. You shouldn't be attached to consumerism like that, even if you got it or not. It shouldn't just be let me spend all the time. You have to take that income, you have to take out those necessary expenses. You got to save some. You got to invest some, right? And in those expenses, you have those consumer items that you want to buy. You should allocate for that. If you want to, hey, I got $100 a month to do whatever I want, or I got 200, or I got 500, I got 1,000, I got 10,000, I got 100,000, whatever that number is, that's up to you. But we really, really have to focus on this income versus expenses thing, right? And especially in retail, especially in consumerism, you don't have to get the new thing. You don't have to buy a bunch of stuff for every holiday. You don't have to fall into this trap. You need to save your money and buy assets and get smart on this stuff so you can get out of the rat race. And then you can buy whatever the heck you want as long as it fits in your income and expense ratio thing, and you're good on your money. That's it. That's all that matters, right? We don't want to prevent you having the joys of life, what you love, whether it's nice things or quantity or whatever it is. We want you to have what you deserve, but we have to get you there and we have to be real about income and expenses when we really get down to it, right? So watch out with the retail. Consumerism and consumer debt is at an all-time high, all right? Like we were talking about earlier, we have major banks warning of recession risk by Q4 2025. So we have JP Morgan Chase, Goldman Sachs, and Morgan Stanley have warned investors about a potential recession by the end of 2025. They have cited higher borrowing costs, slowing down in corporate earnings, and geopolitical tensions. Of course, right? What else would you think with what's going on right now? If you follow the show every week, you know what's going on. You're being updated every single day with my content coming in on what is going on globally. And this tracks with exactly what we've been saying of recession, slowdown, right? We're not talking about a crazy catastrophe necessarily, but we have slowdowns. You just have to study the charts. We have slowdowns. A lot of people forget that recessions happen every 10 years. And people forget them about every 10 years that about happens, all right? So we have analysts that are recommending holding cash and defensive stocks, right, in preparation for the economic turbulence. It's not a bad idea. Like I've said this whole episode, it's not a bad idea. But if now the banks are even warning you, bro, first the banks were saying absolutely not 2 years ago. No way. Still no. Even end of last year, still no way. No, because the banks, they don't want to fear you. They don't want you to be consumed by fear. They don't want you to be scared. They don't want a bank run to go, right? And that's what I mentioned before about the Great Depression, and what really kicked that off. You had a lot of people running to the bank, scared. They were scared, and bankers were putting out rumors, and supposedly, you can't quote me on this. It could have been in J.P. Morgan. It was some old banker, some old, well-known banker put out some rumors out there, and people started taking all their money out, going to the bank saying, I want all my money, take it out. Like we mentioned before, all this money gets loaned out, all of your deposit, not all of it, but banks have only a... BRICS nations are pushing for a digital currency adaptation, right? We mentioned before where BRICS was talking about a gold-backed currency. Well, BRICS leaders have accelerated plans for digital payment system that would reduce dependence on the dollar. That's exactly what they want. They want to de-dollar. If that was their mission statement, it would be just as simple as that. De-dollar, period. That's it. So the system backed by China and Russia aims to integrate blockchain-based settlements among BRICS members, posing a challenge to SWIFT, which that's a money system. A lot of people don't know that. Based on the dollar, American Rand. Do some research on that. And traditional banking networks, right? I'm telling y'all, this is what all of this is about. There's other industries, real estate, business, stocks. Look, when it comes to finance and banking, I'm telling you, that's where all of this intersects and comes together. And so keep your eye on that. And also keep your eye on the like and subscribe button. Make sure you tap that like and subscribe button to support. And this lets me know that I'm creating content that is actually of value and interest to you. Remember, this is fresh content every single week about what is going on this previous week to keep you updated in the current, to keep you informed for the future. All right, so let's keep going. We got U.S. debt at record levels and raising default fears, right? So there's consumer debt, there's also foreclosures, there's also delinquencies. So U.S. corporate debt has surpassed $13 trillion, an all-time high, as companies continue borrowing despite rising interest rates. So debt refinancing costs are surging, right? So that cost to refinance debt is going up, mostly because the interest rate is higher, but the cost of refinance is surging, and there's more fears of more defaults and more credit downgrades, which America got downgraded, guys. And that was last year. That was a little ghetto of America. I'm gonna tell you that much. But no one wants to talk about that. But commercial real estate, tech, and energy, right? We got those downgrades and defaults. Commercial real estate, tech, and energy. Those are the big three sectors we're working on, right? So it's a big deal. Those are drivers in all of these markets. So that's such a big deal. Visa is going to make so much money. Amex is making so much money, right? If you're investing, that maybe some companies you may want to look into, if you're into that type of investing into debt. All right, so let's keep it going. We got gold prices surging as investors seek a safe haven for volatility. So with Trump coming in, we knew he was going to bring a lot of volatility to this market. So we have gold prices. They're hitting a new high of $28.50 per ounce. driven by the uncertainty in the market right now, right? Geopolitical risk, we have rising inflation, and like I said, with the new administration coming in and really just doing what they do. I'll leave it at that. So investors are allocating more capital to gold and commodities to create some type of economic stability for them. Now, I like gold. I love gold. I invest in gold, and a good rule of thumb is gold and oil usually go up if there's conflict going on in the Middle East, right? So if we got a lot of world conflicts, a lot of volatility, a lot of chaos going on, a lot of people look back onto gold because it's been the number one currency over history, where it survived history, right? You read the Bible, they talk about gold and silver in there. I don't hear them talking about dollars, pesos, rubles. I don't hear them talking about any of that, right? I hear we're talking about gold and silver a lot of times. So gold is a big deal. I would invest in gold as best as possible. Really try not to buy these gold ETFs, these gold stocks. Please, it's just buying a paper of a paper of a paper. The further away you get from actual gold, just the worse it is in that asset, right? Try to buy actual gold. Do your research on that. If you don't want to buy actual gold, there are I'm not going to say ETFs, but there are companies, I think like PSLI, something like that. Yeah, something like that. Gold Sprout, I don't know, but pretty much they provide these on demand. So if you ever accumulated enough, bought enough of it, and said, hey, I want it delivered to my house, right? They can go ahead and deliver it to your house. So that's an incentive. But if you can get real gold, do your research on that. Just don't buy they're called derivatives, but the derivative of the derivative of the derivative, and you're just getting so far away from gold that if you actually needed that gold, good luck. You're not going to get it. Anyways, let's keep moving. Man, so we have the EV market facing demand slowdown as Tesla cuts production. Now, don't forget that Trump just had pretty much a car commercial for Tesla in front of the White House this past week, right? So now we're probably going to see demand go up. I don't know. I don't know, Trumpers. Are you guys pro EV or not? Right? And don't put me that I'm not a Republican, or I am, or I'm a bro. I don't got a brand on me. All right, I'm not here to wear no one's gang colors. All right, but those that identify as Trumpers, whoever you are, do you guys like EVs? Are you guys with the EVs? Because I feel like there's a big divide there. Obviously, where the First Lady Alana loves EVs, of course. She's got her fingers in them, elbows in, and Trump over here is he's being very cautious because he knows a lot of his fan base, doesn't like EVs. They still want to roll around in their diesel. I've got a diesel, or they run around in their gas trucks, gas vehicles, whatever it is. No problem with that, but he knows that, and he knows he can't go super EV, super Elon, because he's going to lose half of the core American base type, which I get. But where's the line here? Where's the line? Because there were a lot of complaints about California. Oh, California is forcing everyone to have an EV by 2030, blah, 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 this and this. Okay. Do we like EVs or not? Which one is it? I'm just confused. Do we like Elon and his EVs? Because that's what he's pushing, right? He paid over $200 million to buy a seat pretty much in the cabinet. Let's not lie about this. This isn't about Republicans or Democrats. This is just facts. This is facts. If anyone did it before for Biden, we would be talking about it, or for whoever else, right? But this person put over $200 million into his campaign to get a seat. Great. And we know the companies he runs: Neuralink, Starlink, SpaceX, Tesla. And he's already gotten government contracts for those companies in the last term. People don't realize that. They're talking about government waste, taxpayers, this and that. I'm not saying any of these companies are waste at all. I'm not saying that. But what I'm saying is he did use government subsidies, and he did tug on Daddy Trump's, coat to say, hey, give me some money, I'll help you out, blah, blah, blah. Look, that's what a lot of corporations do. That's what they all do. They play nice because they can get tax incentives, write-offs, all these things from the government. They scratch each other's back. So I don't blame them at all. I'm not blaming anyone. My question is for the Trumpers, for the Republicans, is which is it? Are we for EVs or are we not? Or is there a fine line here? Or are you just not for EVs because, I don't know, you think hippie liberals love EVs or something? But where's the line here? Because now we have both of these folks in the White House, pretty much a president and a puppet president type thing. And one loves EVs and one doesn't. But now the one that doesn't just did a Tesla commercial in front of the White House. So I don't know. I'm confused, Trumpers. Please put in the comments what you guys think so we can understand this a little bit more. I just want to understand the market more, understand Tesla more. And answering this from someone that has more insight on what Trump's doing and his policies and maybe his ideals or something like that. Maybe one of y'all can call him, hit him up on his beeper or something. He's probably got a life alert dangling, hit him up, let's try to figure this out. Does the White House like EVs or not? Regardless of that, I see EVs really pushing into America the next 5-10 years, even more and more. Like I said at the beginning of this episode, I really see us redoing the whole road system, the whole electrical system. And EVs it's going to be normal. They want your attention. They would rather probably less car accidents and less stuff like that, right? They're going to say it's safer. They're going to say you're not going to get a DUI if you're in the passenger seat and you're drunk and your car drives you home, and you get pulled over, you're not going to get a DUI, right? And then, but it's really, they're going to have your attention now. Right now, instead of you driving, you can work, right? And they'll say, oh, you can be more productive. But it's really, you're going to be on Instagram, you're going to be using apps, they're going to be collecting your data, and that's just all it is. And then it's also self-driving too, so they're also tapped into it. All of it's all about control. Look, if you haven't told already, I like sci-fi novels. I'm into that type of stuff. I don't know if we'd hit a Mad Max type level type place. Maybe in 1,000 years, 500 years, who knows? But I see the advancement of tech not stopping. Since in the 90s, me growing up around tech, it's just more and more, and the things that are out here you would have never really thought of would have turned to tech. So I just see it more and more, and also as my experience as an electrician, understanding data, power banks, data storage, right? How to gain this storage, right? How to expand it, right? All this stuff. It's kind of exciting. It's very exciting, and I think there's a lot of opportunity in the between now and the next 10 years, and I think even before that, before we really kick into the next cycle. Because what we don't want is, you don't want to hit the point where everything's then going back up and everyone's rallying back up, and you're too late. Once people are already fully believing at this point, you're too late. We have to get in here when there's still a lot of doubt, of. I've heard a good signal is when people think it can no longer go any lower. Everyone is down and out. The analysts finally come out and say, "Oh, it's just so bad." That's around because this is all human psyche. You have the whole market is human psyche reactions to things that are actually happening and things that aren't actually happening, right? So when they go left, you got to go right. When they cut right, you got to juke left. Right, we got to figure it out and dodge the market. And like I always say, we got to swim between the whales and the sharks. Right, we got to get what we can, learn the game, learn real estate, learn business, learn stocks, learn finance. If you don't have to be an entrepreneur, you don't have to leave your W-2. Your W-2, you can take that and put it into real estate, put it into business, put it into stocks, put it into finance, and still stay at your W-2. You're making good money there. You got benefits. You love it. Great. But put that money into these 4 pots here that can make you more money. Because at the end of the day, you have a job. The moment you stop working for whatever reason, that money's going to stop coming in. Even if it is retirement. Go ahead, run your retirement numbers. Run them, project them well, and run them and see if that's enough for you to live off of. That's what a lot of people don't do. They don't run these projections on the future. They wait till they get there and they're like, oh, this is enough money. Well, if you would have ran those projections when you were 30, you would have been seeing that. That's what I realized when I was in the military. I realized as a E6 going to get commissioned as an officer, on that route, I looked at it, I was like, man, at 20 years with retirement, all this stuff, that's not enough money to live for the rest of my life, to take care of my kids. It's not enough money, right? So I want you to think about this forward looking, projecting forward of what is your freedom number, right? What is that number that you could leave your job right now or that you would be comfortable with, right? A lot of people don't even know their expenses, right? To tell me, what are your expenses? Get all these monthly expenses together, vacations, everything you want in the year, blah, blah. Get them all together and let's get that number right in front of us so we know, hey, I know I need to make $10,000 a month to be comfortable. Whatever that means, whether that's active income through working, that's passive income through this or that. But at least now we know. I just meet too many people that they don't even know how much money they need to make. And you got folks retiring that they want to go work right away from doing 20 years in the military. They want to go contract. They want to go make six figures. They want to go provide. But it's like, hold up, if we take account of your retirement, if you have disability, if you have other sources of income, if you invested other assets, you may not need to go work. Or you may only need let's say $1,000 in this case. Let's say we run all the numbers with your retirement, all this stuff. You only need $1,000 a month extra. You pick up a side job, a part-time job. You start making money just some other way. It's just to make that $1,000. You already accounted for money in that for your savings, for investments, for all that stuff. So this is the absolute top. You need that $1,000. Does that mean that you should go work wherever or contract working 40, 50, 60 hours a week, right? Maybe doing something you don't enjoy just to make that extra 1,000, right? Now, if you told me, man, I gotta make an extra $5,000, $10,000. Okay, working that 40-hour job, going into that next career field may be the right decision, but it's not the right decision for everyone, right? Sometimes I question people why they don't want to figure out ways so that they could have more time, right? I don't think a lot of people really reflect on themselves on what they would like to do. That you wouldn't even know what to do with all the time, right? You had off. Well, what would you do with it, right? And when I talk to people about this, it makes me question, like, do you like your family? Do you like your wife and your kids that you don't want to stop deploying? You don't want to get out of the military. You don't want to stop working. You have to always have a job, but you have kids, you have grandkids, you have a partner, that could use your love and support and time, and you've only got so much time. At this point, you may be, let's say, 40 years old that you retire, 40, 50 years old, who knows? You still got 40, 50 years left to go. And you could pick up another career, of course, but this just comes back to us knowing what are our income, what's our income, what are our expenses, and really taking a look at both of those when it comes to retirement, when it comes to career planning, when it comes to your next step, when it comes to investments. But when it comes to those two things, we got to look at at the income and the expenses. You could make $5 million a year, $10 million a year, $20 million a year and go broke. We see it. We see it all the time. Look at these celebrities, right? Look at the lottery winners. Look at the lottery winners. It doesn't matter if you were even given all this money. A lot of times without the knowledge, education, and know-how, you're going to end up dead, in jail, lose all your money, and back to square one, right? So we have to get better. We have to improve, and we have to have these conversations about wealth. These are natural, regular conversations that we should be having all the time. There's a reason why they made it a stigma to talk about how much you make at a job, right, with others, because they don't want you to talk about that with others, right? And then sometimes it taps to those people's insecurity and I don't want to talk about because I feel like I don't make that much. We have to talk about these things. It's money, business, real estate, stocks, finance. We love it all, and we're not shy about it one bit. You deserve it. You deserve to be wealthy. You deserve to be rich. You deserve to be smart. You deserve to be safe. You deserve to have assets, shelter. You deserve to have everything you want. Now it's just up to you. Are you going to watch the show every week? Because I'll help you get there. I'm just saying. I'm just putting it out there. Look, so this was another beautiful episode with tons of value. right? Let me know in the comments what value, what nuggets you got from this. I truly want to know, okay? So drop a comment below, ask any question you've got, right? And tap the notification bell, please, please, please do. Like, subscribe, hit the notification bell, and stay up to date with Military Wealth Club, all right? If you're ready to start your real estate journey, visit my site, themilitaryrealtor.us. That is themilitaryrealtor.us. There's free guides there, free real estate information, right? Take a look at the site. I'm telling you, you will not be disappointed. And we've got gear up there too, not just this, but investors, builders, creatives. Take a look at the merch site on there. Go on there, themilitaryrealtor.us, and check it out. And you can also use that link to schedule a free, no obligation phone call to get you started on your real estate journey. All right, y'all. I'm Mercedes, the Military Realtor. Take care and God bless.